Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
What a lovely morning, great Sunday morning, and good to have all of you investing your precious Sunday hour with us. I hope you guys have great learning experience. Today's topic is very, very interesting. We are going to talk about war. We are going to see whether we could have predicted war earlier. We'll see what to do when the war is here, and we'll also see what is expectation, what will happen to the market after the war is terminated. So I hope you guys are taking care of yourself. Yes, these are challenging times, but I've been saying this to everyone. These are the perfect times to learn. Absolutely perfect time to learn, because when market recovers, which it will recover at some point of time, it will recover. I mean, statistically, it has been proven that war always have very short-term effect. Eventually, market recover, and typically when market recovers after the war, the recovery is far more steeper. You can call it a V-shaped recovery. But the V may remain U for some period of time, but the final result will be market will recover. So this is the best time to start your learning related to market. And I mean, a lot of people have already joined my trading mentorship program and they are attending the session today. And I'm sure other people also who will find our knowledge useful will also join our unique, India's only multi-asset trading mentorship program. So here we are, let's go. So what I'm going to do is first 25 minutes or so, I'm going to take a presentation where I'm going to give you a description about what is happening in the war and what ideally you should do in this kind of a scenario. And then we'll have Shuradeep, Chetan, Sanando, and other people joining us and giving their perspective. All right. Hello, good morning, Shuradeep.
Good morning.
Good morning. So great. So you can stay put for some time. I will take the session and you can probably become active again in say 20-25 minutes. Till that time, hear me out. You will find this
Sure,
knowledge
sir. It
very
is always a
interesting.
pleasure to hear to you.
All right. So here we are. So we have a small presentation for you. I'm going to share with you what I feel is going to happen soon. Okay. Now, can financial markets predict war? This is a question which should be worth $1 billion. And if I am able to answer this question, I deserve to be paid $1 billion. Because if anything which can predict war, any kind of uncertainty in the world, if anything can do that, it has to be financial market. There is no other instrument except the mindset of the person who has initiated the war. But I strongly believe that financial market is a abyss of data. And if you can decode the data in the right manner, you can predict something is going to happen and you can act accordingly. Okay. So, I mean, we all know what is happening in the war, so I don't want to waste your time on this. But yeah, the US-Iran war, the Israel war, I don't know what should we say? Is it a Israel-Iran war? It's a US-Iran war? We don't know. But for sure, we know one person in the world right now. He is in absolutely frenzy and trying to prove every other person in the world wrong. And that is Mr. Donald Trump. Okay. That is a reality. Things which are not in our control, we can't do anything about it, and we have to accept the reality as it is. So market is down by over 10%. India VIX is up 127% since last 1 year. Brent is almost 108, and it is already in discussion that Brent may actually touch $200. Rupee is 92.53. This is as on 19th of March when the presentation was made, and already things have become worse after that. Except in equity, there is a bit of recovery. What we will do is we'll study 8 historical wars and we'll see what happened to the market in last 8 wars. And also we will try to see what can happen in the current scenario. When we talk about war, basically we are talking about 8 financial indicators, which if you study all these indicators together, there is a possibility that you can predict there is something going to happen in the world. What are the 8 indicators? India VIX, oil and energy prices, gold prices, defense stock, rupee and FX, which is including dollar index, FPI flows, commodity prices, particularly LNG, etc., bond yield, and RBI. These are the 8 primary data points as an Indian you should track regularly to make an assessment of whether there is something wrong in the world right now, and you may like to take some action if there is something wrong in the world. I have penned down what has happened to the respective instruments. VIX went up, Brent went up, gold ideally should have gone up, but already gold has gone up so much in last couple of months that it cooled down after the war announcement happened. Defense stock has been again strong. Rupee has been weak for some time. FPI outflow has been quite candid. Commodity prices, particularly energy, LNG prices have gone up. And the most important instrument which predicts literally everything is bond yield. If the bond yield is going up, there is something wrong in the world. You better be careful and have a moderate size of your portfolio. Don't worry, we'll discuss everything. I have 13, 14 slides for all of you. So don't worry. And don't ask me questions right now because my flow is here and it will really help you if you just listen to what I'm saying. Okay. Don't have to ask questions all the time. Just listen to what I'm saying. Okay. Now, these are the 8 wars which we are going to talk about. Gulf War, Kargil War, Afghan War, Iraq War, Ukraine War, Gaza War, and US-Iran War. Okay. If you look at S&P, the global equity, US equity market, before the war, this is before the war started, equity market were already doing negative rounds. Even in US-Iran war, when the war announced, market was already down by 5%. That
I
means
have taken a insurance, I have tried to take an
someone is talking in the middle. Can you please mute yourself? Yeah, thank you. So S&P was already down 5%, okay, before the start of the war. During the war, you see most of the markets recover during the war. Even when the war is there, most of the market recover. And if you look at the markets after the war, in Gulf War, BSC went down 15%, Sensex went down 13%, Sensex went down 10%, it rebounded 25%. Iraq War, Sensex went down 6%, then 150%. Ukraine, Sensex went down 8%, then 3 months recovery. More or less, statistically, it is given that while the markets go down as a precursor to war, during the war, there will be a phase when everyone will accept the reality that the war is going to be there and market will start recover. That means Indian market potentially, statistically, may see recovery at some point of time. Now, will it be a V-shaped recovery or a U-shaped recovery? That time will only see. We are 100% sure based on historical data that there will be recovery in market. Are you guys with me on this? Let me take a quick response from everyone. Are you guys with me on this? Do you believe what I'm saying, that there will be recovery in market sooner than later? Okay. Now, you see oil prices went up every time war is there. Gold prices went up every time war is there. Okay. Rupee became weak every time war is there. Okay. Now, this is a pictorial presentation of what return Indian market gave pre-war, during the war, and after the war. Can you see the pattern? Can you see the pattern? Pre-war, it is red. During the war, it is most of the time it is recovery. And after the war, look at the building size. Iraq war, Indian market gave a return of 68%. And this is return after, I think this is 1 year return. Okay, if I'm not wrong, let me just check it. It's a 1 year or 2 year return. Oh, I'm not able to. Sorry about this, but yes, there is fair bit of recovery which happens after the war. So please get your shopping bag ready because we will have recovery very soon. Okay. Now let's talk about the current conflict and the analysis of the conflict. What is the biggest problem which we are facing right now? Our problem is not that both the countries are fighting. I mean, there are many countries fighting the war for many, many years. Some countries we even don't know that they are in proxy war. Our problem is that attack on oil ships, on gas tankers, the Strait of Hormuz. That is our problem. Okay. That is leading to a major economic disruption in our working. Because India is crude dependent, okay? Because India is facing LPG shortage crisis, because rupee is getting weaker and the current account deficit will balloon, because lot of money which comes from Gulf region by Indians who are earning in Gulf, lot of money, almost 3.5 lakh crore, which comes from Gulf diaspora to India, that will get disrupted. So India's problem is on the right bottom hand side. Okay. Will it be a permanent problem for India? The answer is no. These are temporary problems because if India buys crude, someone sells. If India don't buy crude, someone doesn't sell. And there will be far more economic impact on that country which is not able to sell. Remember that. It is the world works in collaboration mode. It is not possible that we will keep on struggling and other people will keep on prospering. The whole world economy has to prosper together or has to go down together. Will this war lead to world economy going down? Possibly yes, but not as much as what we are trying to project. Maybe the global GDP will go down a bit. India GDP will go down a bit. But whenever we talk about stock market, it's always relativity. Is India, even though the GDP is going down, is India still better than other people? The answer has to be answered. So hope you understand the problem with India, right? You see what happened on the Lal Street. And this is a kind of a recap of what I've discussed, that lot of FII selling is happening. And FII selling is not only the function of war, it is something which has been happening for many, many months because of certain policies of government which FIIs don't like. Okay. You see how sectors has started underperforming, but then there are sectors which are outperforming as well. Just say energy sector is outperforming, defense sector is outperforming, pharma sector is outperforming. What does it mean? That means that the moment there will be recovery in Indian market, the new leaders will emerge because every market swing has a leader or bunch of leaders. So new leaders will emerge. Our role as trader is to find those new leaders and trade with those new leaders. Commodity prices are function of inflation. And if commodity goes up, inflation goes up, current account deficit goes up, which becomes a big pain for India. And that's where I think the most of the problem lies at this moment. Okay. You look at this data, and I was actually trying to see before war, this war, what happened to the stock prices of all the major defense companies. And already you see these defense companies in India and globally, these defense companies' prices were going up. This is pre-war return. What does it mean? Someone already knew that war is going to happen. And the person was buying all the defense stocks, which has direct beneficiary of war activity. Data. Data speaks 1,000 words. If you track data properly, you definitely will be able to create value for yourself. All right, so let me just quickly give you a thought process of what you should do if there is a war. Okay, so phase one is pre-war positioning for Indian investor, which is for 6 to 18 months, where India defense stocks, energy stocks, and reduce exposure in automobile, indigo, etc., etc. That's phase one. Phase two is when there is a war time already. Right now, we are in phase two. So loading up ONGC, oil, gas, defense, gold ETF, IT companies, metals, these are very obvious thing, and avoiding indigo, SpiceJet, L&T, etc. is the most logical thing to do. Post-war recovery, the moment war is kind of settled, we may see war concluded or we may see war getting settled. Then you have these ideas where you need to buy again. L&T, SDFC, ICICI, Indigo, Maruti, ITC Hotel, all these stocks which have been butchered because of the current negativity in the market, probably they will recover first. What do? Do you buy now? No. You wait for the phase 3 to start initiated. And who will tell us phase 3 has initiated? Who will tell us? Data will tell us phase 3 has got initiated. So let's see what data is telling us. The first indicator, absolutely first indicator, which will tell you that the dust is now getting settled, is yen. Yen currency. Because yen is the most important currency. Uh, if there is problem in the world, people move to yen. If there is less problem in the world, people will move out of yen. So the most important asset which will tell you, yes, things are getting settled is this yen versus dollar. Second is dollar index. If the dollar index starts getting settled, starts trading below 100, which is now happening, dollar index is already going down and it is happening. There is a possibility that the recovery will happen. Third, the world equity index. This is a world equity index. It has fallen like crazy. Okay. This is 200-day moving average. If the world equity index recovers, that means again, money has started getting inside equity market, which should give you an incentive. Okay, yes, I may also think of participating in Indian equity market. When we look at Nifty, it is in a bad shape. No one would like to touch right now, which is fair call, right? Because we are in a high risk zone at this moment. But the only person who can help you build that conviction that yes, I am ready to buy now is you. You have to learn the art of analyzing the data and connect the dot. If you hear my video, the podcast which I did with Kushal Loda, you will understand why connecting the dot is the most important role of a financial market intermediary, right? Ayush is asking, how do you know that the bottom has been made? You can only know when the bottom has been made, when you are able to connect the dots and see that, yes, this makes perfect sense. Now I am ready to start deploying my capital in that. There cannot be any fixed formula to tell you, yes, this is the reason why bottom has been made. No. All the aspects of market has to be cumulated, studied together before you conclude that yes, bottom has been made. And that is the reason why understanding of multi-asset is so important. If you don't know multi-asset, if you don't understand currency, if you don't understand bond market, look at the bond market, US bond market. This is US bond market. If US bond market is going up, Ayush, bottom has not been made. Because if US bond market is going up, it will India market or equity market will continue to struggle. So how do you know the bottom is made? US bond market reversing, dollar index reversing, commodities pricing cooling down. Even though the war will be continued, maybe war will not get closed, it will continue, but you will get a sign of reversal from multiple assets. Absolutely, Ayush. VIX dropping. So basically, if you have solid understanding of multi-asset, and if you can connect the dot the way I'm connecting, the most important thing for you will be that you will be able to protect your capital. And in stock market, protecting your capital is your primary objective. अगर हम रह गए तो हम पैसा बना लेंगे. अगर हम रह ही नहीं पाए तो हम पैसा कैसे बनाएंगे? So, multi-asset understanding is not about trading in commodities or equity or everything. No, multi-asset is also about connecting the dot. Exactly the reason why I want all of you, every one of you, to join my mentorship program. And this is not just a course, it is a lifelong relationship with me you will build, where you will understand all these things which are important for you to become a sensible market participant. Join the program. Don't look at the cost. If you have any issue, talk to my team. And I can promise you that your vision of becoming an independent market professional with a lot of sensible working will be fulfilled after you go through the program. It's a unique program, 4 mentors, and the way we are working and teaching is just phenomenal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.